Now to Steve Forbes, who joins us, the Forbes media chairman. And Steve, let's take up stimulus on the merits, right, to start things off if we can. The idea out there in the market is that, both for the economy and the stock market, maybe we need some stimulus to keep us going late this year and early next year. The question is how much and what kind? What do you think? What would be enough?
Well, I don't think we should just look at a number. I think we have to look at the specific items. There's good stimulus and bad stimulus. And helping out the airlines, that's fine. Cutting another check for individuals, fine. Paying people not to work, that's not good. Bailing out mismanaged states, not good. Covering real expenses for COVID, fine. So it's the devil or the God is in the details. And that's where I think Nancy Pelosi's been so dragging her feet on this. She wants a breakout, bailouts for states, and massive increases in unemployment benefits each week. And those two things would not work very well. And I think the president should hold out and even increase the $1,200 proposal for individuals. If you're not going to do anything on the unemployment side, increase that to, say, $2,000. A big swatch of cash. Households would be delighted with it, increasing dependents from $500 to $1,000. Family of four, $6,000. That would come in very handy right now.
So if Pelosi digs in and says, I'm not doing anything, as she said earlier, unless it's a quote unquote, big sweeping bill, then what's the political calculation for Republicans? Not only the president, but many of these congressional Republicans, senators and members of the House that are up for re-election and in tough fights. Do you give in? Do you try to get something done pre-election? Or do you, to your earlier point, hold out? If you do, there's got to be some political risk there of holding out, right?
Well, there's political risk, too, in passing a bad bill that's going to end up doing the economy more harm than good. And so it's really going to depend on the Republicans being laser focused and framing the issue the right way. Bailing out mismanaged states does not play well outside of New York, New Jersey, and Illinois. The rest of the country wants no part of it. And so if they come out, the president comes out with two or three simple things, $2,000 for individuals, $1,000 for dependents, maybe suspend the payroll tax, help for the airlines, and maybe more money to help out restaurants and the like. Simple package, 3 or 4 items. I think you can make that a politically winning issue and say the Democrats trying to bail out mismanagement, no way.
All right, the other issue in the stock market here over the last week or so has, of course, been the presidential election itself. Let me ask you about that and what you think is actually happening, because Joe Biden has led in the polls throughout, but his lead has gotten bigger. It has solidified since the first debate and the president going through COVID. And now there seems to be a bigger bet that a Biden victory is more likely. And the argument I've heard from investors who are kind of on that side of why that might not be a terrible thing, is kind of twofold. They first say that if Biden wins decisively, then we're not arguing over who the winner is going to be. And that's a good thing because the market's like certainty. But the second thing I've been hearing more and more of, which is the one I'd really like you to respond to from Democrats and some investors, is that a Biden win would actually lead to more stimulus, which we've been talking about, especially if the Democrats, take the Senate. And that, they say, is one of the reasons that even though a Biden win looks more likely, that the market's not selling off on that. What do you think?
I think the markets are sort of, and this will sound very counterintuitive, and that is the markets, I think, still think the Republicans can win or at least hold the Senate, even though things are looking bleak right now. Because the idea that there's going to be stimulus that's going to keep this economy going, not when you have a 40% capital gains tax, 60% marginal tax rates, massive new regulations, increasing business taxes and the like, the same failed policies of the last 8 years before Trump took office, that's going to hurt the economy. And when you have a hurting economy, that eventually hurts companies, which means it's going to hurt stocks. 40% capital gains tax, what's that going to do to the 100 million people holding 401ks and IRAs, the stocks in those? Not so good. So those who say, oh, the Fed will bail us out and the government spends a lot of money, kind of, where does the government get the money from? It gets it from people producing things, real things. And if you have a sluggish economy, that isn't going to happen. We're going to get the 1970s stagnation and inflation combined.
And for investors, that's selling what happened when, Steve, right into the year end, it would seem logical if you thought taxes were going up next year. Is that what you're thinking?
Sure, you would. If
Biden were to win November 3rd?
Yeah, you're exactly right. If you face a 40% capital gains tax versus the still too high 23, 24% federal rate today, You're going to take profits now. You may the price may go down, but you want to take what you can before the tax man comes and makes it impossible to sell. He's going to take most of what you have there. So yes, you're going to see huge selling pressures.
And there is still time. We're only in October. Still time for the election and for the market. Steve, we'll talk to you plenty of times between now and then. Thanks, as always, Steve Forbes.